Hi, I'm Rudy Martin for Uncommon Wisdom Daily. I've been saying for months now that I expect mergers and acquisitions to spur stock market growth in the second half of this year, and many analysts agreed with me. Early this year, the Thomson Reuters Global M&A Survey predicted that M&A volume would surpass $3 trillion in 2011, but we're almost two-thirds of the way through the year, and the total volume is just $1.7 trillion. So today, I want to explain that gap and help investors position themselves for the final 4 months of the year. One of the industries in which investors expected to see a lot of M&A activity this year was natural resources. And we did see some movement, including the buyout of the U.S. shale gas company Petrohawk Energy by the Anglo-Australian giant BHP Billiton. But following that acquisition, BHP said there are few other targets that fit its investment criteria in that sector. BHP, along with other miners, has benefited from strong demand for commodities, especially in emerging markets such as China and India. And shareholders have demanded that those companies hand over a larger portion of the cash that they've been generating and that's just sitting on the balance sheets. In response, BHP just completed a $10 billion stock repurchase program 6 months ahead of schedule. In addition, other miners, including Rio Tinto and Vale, have also announced share buyback plans. But I think the activity in this sector is far from over. BHP has said that it may be looking for deals to beef up its production of potash, copper, oil, and natural gas. In fact, Potash Corp of Saskatchewan recently rose nearly 10% on speculation that it may be a buyout target. Now, another industry that may have increased M&A volume in the next few months is consumer products, especially in Latin America. And one sector that I'm keeping my eye on in particular is beverages. Heineken just forecast flat earnings for the rest of the year, blaming higher commodity and advertising costs. Now, the world's third largest brewer knows that in order to find rapid growth, it has to look outside of Europe and the United States. Last year, it bought the brewing operations of FEMSA, sending that stock up $4 in a day. Since then, it's up 62%. Now, Bill Gates' Cascade investment has a major stake in the company as well as Coca-Cola FEMSA. He holds 33% of the ADRs of the bottler and distributor, and that stock has a lot of fans as well. But my personal favorite is Ambev. It's the world's leading brewer, it has a great balance sheet, and a dividend yield of 4.3% over the last 12 months. Now, Ambev's biggest competitor, SAB Miller, is also looking to make a splash in the M&A markets. It recently took its $10 billion offer for Foster's directly to the shareholders. And with no rival bidders, that deal is likely to go through. The bottom line is smaller companies that are potential acquisition targets have been weakened by the volatile stock market conditions. So the big companies with large cash hoards now have the power to set valuations and wait out their targets. That's why I believe the next 4 months could be a feeding frenzy on the smaller and mid-sized companies. I'm Rudy Martin for Uncommon Wisdom Daily. Thanks for watching.